How many people, Sophia, you have heard they drank poison or they hang themselves because they are indebted heavily out of interest-bearing loans? How many?
The statistics are worrying.
In 2019, I was in Kuala Lumpur, Malaysia. I was surprised to learn that up to 40% of the clients dealing in Islamic finance, whether banking or Islamic insurance, they were Mandarin Chinese. When I was asked why, they told me only one answer. Islamic finance is fair.
Assalamu alaikum wa rahmatullahi wa barakatuh. Very good morning, dear listeners. Today, we are going to be talking about a topic that has been barely unknown or misunderstood. A topic that has become a global phenomenon. A topic whose financial system has, in some countries, outpaced even the conventional system. And that is Islamic finance. My name is Sophia Chigozi, and I am the ED of the Islamic Finance Hub, and welcome to the Islamic Finance Law and Practice series, our podcast. Today we have a guest, a global practitioner, a sheikh, a leader in the Islamic finance industry. Sheikh, the other time we had a discussion, I learned something from you, and you said that from the story of the Prophet Musa, when he approached the burning bush, he was told, upon asking who was behind the burning bush, God introduced himself by saying that I am the Lord your God. And one of the takeaways from that story is that a person ought to introduce themselves. So much as I have the singular honor to host you today, I'd like to, picking from the lessons of that story, allow you introduce us to our viewers and listeners.
Thank you so much, Sophia. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam.
As Sophia correctly narrates about that last incident she had a takeaway, I may only correct her that Moses didn't ask. He was still wandering on the burning bush when he heard a voice from the bush. "O Musa, I am your Lord." The verse really says, Innani ana Allahu la ilaha illa ana fa'abudni wa akhimi salat li dhikri. Verily, I am Allah. Didn't say I'm your Lord, I'm what? I am Allah. Allah means a deity, a deity worshipped, revered, obeyed by the creatures. So yes, the lesson you take away there is before even Moses asked, and he didn't know even there is a person, it was just a burning bush. So when the Creator himself, Almighty God himself, starts to introduce himself, before anything else, this is a lesson to all of us human beings. When you meet, you have to begin with introduction. So if you go to Western countries, the first thing is touching the hand and mentioning who the person is. I am Sheikh Isa, I'm coming from so and so. Introduction, so that the person you are talking to knows, who am I talking to? What is the caliber of this person? So me, I am Sheikh Mohammed Isa. I am a Muslim scholar first, but also I am an Islamic finance expert cutting across the Islamic financial ecosystem on banking, Islamic microfinance, Islamic insurance called the takaful, Islamic capital markets, which is the biggest component because in it you get the sukuk, you have the Islamic Collective Investment Scheme, you got the Islamic Real Estate Trust, you got Islamic Commodity Market, you got Islamic Money Market, you got Islamic Financial Technology or FinTech. You got a lot of it. So I have been working with this over 20 years now, and I am a scholar in Islamic finance, I am a consultant, I am a trainer, I am an advisor. 2010, I was the Sharia advisor for Stanbic Islamic Window. And now I'm the Sharia advisor to Al Huda Center for Islamic Banking and Economics, which is based in Dubai, UAE, but also a Sharia advisor to People's Bank of Zanzibar Islamic Window, which is known as PBZ Ikhlas. And I'm also a Sharia advisor to Al Baraka Takaful, which is going to start maybe in January next year. But also I hold managerial positions, executive positions in a number of, financial, Islamic financial institutions or corporates.
All right, thank you so much for sharing with us, Sheikh Issa. It's wow, so much to learn from you. Your first career was in forestry. How and why did you transition into Islamic finance?
Yeah, I took my subjects in ordinary level education in science subjects, fond of science. And when I went to advanced level, I specialized in science also. My combination was PCB, physics, chemistry, and biology, of course with mathematics in there.
Oh.
So when I completed my A level, I went for a diploma in forestry, completed it in 2 years, and I was posted to work as a government forest officer, especially for forest extension services, going to the people, educating them about the importance of forests and forestry, And I worked for about 2.5 years, and then I resigned myself because I didn't find the public sectors being fit to my belief. There are things which I saw they were endangering my belief in Allah, my practice as a Muslim. And I voluntarily wrote a letter to the director of forestry division to resign. And that's when I got ample time of dealing with the Islamic activities in general. I'm also a chairman for Muslim Development Board in Shinyanga and executive chair, Deputy Secretary General for the Muslim Sunnah organization in Tanzania, but also I'm executive committee of Muslim Scholars Organization in Tanzania, executive chairman of Awqaf Tanzania. So you can imagine, after leaving the public sector as a forester, then I went deep into saving Islam, and Muslims. And I've been rewarded, I've traveled far and wide globally only because I'm a Muslim scholar, because I'm an Islamic, finance expert. I couldn't have reached where I've reached globally if I remained there at the government. I believe so. So I can just say it was a call in me to save the humanity. Because when you talk about Islamic finance, it's not for Muslims only. This is what we can say. It is global for non-Muslims, Muslims. In 2019, I was in Kuala Lumpur, Malaysia. I was surprised to learn that up to 40% of the clients dealing in Islamic finance, whether banking or Islamic insurance, they were Mandarin Chinese. The Chinese are not, most of them are not even, Christians. They follow their Buddhistic religion or Confucius religion. So I took an interest to go and talk to them. Why do they subscribe to Islamic finance? So I went to a place in Kuala Lumpur called Chinatown. That's specifically for Chinese. And I met them and I talked to them. And I proved really they are clients of Islamic banking and finance. When I was asked why, they told me only one answer. Islamic finance is fair.
Thank you for sharing your journey with us. So from a period of about 50 years ago when it was virtually unknown, the Islamic financial system has grown to become an integral sector of the modern banking, finance, and capital markets sectors. Walk us through what the international financial architecture of Islamic finance looks like, as well as the distinctive segments from the various local perspectives.
Yeah, it's very important to talk about the evolution of Islamic finance. When you say Islamic finance, it is based in the teachings of Islam, principles of economy, based in the teachings of the Quran and Sunnah of the Holy Prophet, and to the understanding of the early Muslim generations. And because Islam is about humanity, these same principles of finance were practiced during the Prophet's era and during the rightly guided caliphs or rulers of Muslim states. Today you are talking about opening an account in an Islamic bank, maybe Salam Bank here. Account called a deposit account called Qarad Hasana or Wadi'a account or Mudaraba fixed deposit account. These terminologies, Wadi'a, Qarad Hasana, Mudaraba, Musharaka, Murabaha, Ijara, Istisna, and so on, you will hear a lot in Islamic finance. They were there during the Prophet time. Because Islam is a complete system of life. It doesn't leave a human being to have room of speculating and, inventing things. Yeah? It is rightly guided by the guidance from Allah through the revelation in the Quran and the prophetic teachings. So, when Islam was ruling the world, almost 14 centuries, the last Muslim empire was the Ottoman Empire. The Ottoman Empire was ruling by then 2/3 of the world, up to Spain, up to the Baltic regions, the Yugoslavia, Kosovo and all those ones, Austria and so on. They were under the Ottoman Empire. To the Northern Africa, Morocco, even to the Eastern Africa, the Ottoman Empire was ruling Middle East up to Indonesia and Malaysia. They were all under one empire, the Ottoman Empire. And when it declined in the beginning of the 19th century, that's when the colonialists came to our lands, to Africa, especially we are in Africa. In 1884, 85, with the Berlin Conference partitioning of Africa. So the Western mode of life, with all its systems, political, administrative, finance, came to our countries. And in East Africa, Muslims were there like they were in Northern Africa. See? So all those systems which Muslims were using in their finance were replaced by the conventional finance. Conventional finance is based on human creativity. It's not from God. And one of the pillars of conventional finance is interest. So when the colonialism was leaving African continent, countries, especially Islamic countries like Egypt and so on, Muslim scholars started asking themselves, now we are gaining independence. Should we continue with this Western system whereby it is completely un-Islamic? So that's when the Muslim scholar said, no, we've got to go back to our origin. Reinstitutionalizing Islamic finance in the society. And it began in Egypt. That's where the story begins of Islamic finance. Right. A small town called Montgomery in Egypt, a Muslim, and he was an engineer, by the way, just like me. I'm a forester, became an Islamic finance expert, known as Ahmed Nagar. Ahmed Nagar went to study engineering in Germany. And he saw Western financial system and its interest and its everything. When he came back to Egypt, he said, why shouldn't we start, Islamic finance? Then they started a small SACCOS, Saving and Credit Society in Montgomery, and it was called a Montgomery SACCOS. It was in 1963. By 1967, the idea has permeated the Egyptian society to the extent that the government took over that microfinance and changed it into Nasser Bank. So Nasser Bank was the first modern Islamic financial institution in Egypt in 1967. By 1988, the Muslim Scholars Academy, known as Majma al-Fiqh al-Islami or Muslim Academy, gave a religious verdict or fatwa declaring all modes of financing, banking, of conventional banking, insurance, capital markets are being haram according to Islam. And a fatwa also saying that Islamic insurance, Islamic banking, Islamic capital markets like Sukuk and so on, these are Sharia compliant. So that fatwa was very important. So it spread globally, and in 1990, or in 1990, yes, takaful companies begin in the Middle East, and they spread across the globe. To 1990 also, that's when the beginning of the Sukuk, or Islamic investment securities, began in Malaysia. In 2008, 2009, after the global financial crisis, that's when the Islamic finance exploded. In 2009, in the 9th of March, Pope Benedict XVI, the late Pope, the leader of the Roman Catholic and the State of Vatican, he gave a statement encouraging Western financial system to benchmark on Islamic banking and finance because of the profit and loss sharing nature of Islamic finance, because of its not charging interest. That is Pope Benedict XVI. So if you are a Christian watching this podcast, you have to quote it. Go and find in the internet about the Pope Benedict XVI statement on Islamic finance. It was recorded in an official Vatican newspaper, which is called L'Osservatore Romano, official Vatican newspaper. And this year I was so happy in the month of August.
Yeah.
Pope Leo XIV also has spoken against interest. Pope Leo XIV, the leader of the Roman Catholic. He says usual interest is a great sin because it deprived people of their economic benefit and even drives some of them to kill themselves. How many people, Sophia, you have heard they drank poison or they hang themselves because they are indebted heavily out of interest-bearing loans? How many?
The statistics are worrying.
They are worrying. In Tanzania, they even call those loans kaushadam. You know what this kaushadam means?
No.
Drying the blood of a person. Someone is walking the street like he's crazy, he's talking alone. You ask, what's wrong? I'm okay. Not okay, because the debt are piling on top of one another. Especially the microfinances have capitalized on the need of the people, daily needs for school fees, whatever. They're giving interest-bearing loan in microfinances, and the Western microfinances have invaded Africa. Our people are being skinned of their money. The loan in a microfinance, because one who comes to take a loan are so riskier, they are even 50% interest. 50% interest, up to 60 in my country.
Wow.
Because someone is in need, he takes that loan, or she takes that loan.
And the situation is the same here.
Yeah. So, actually, Islamic finance permeates every sector of life. Public, like I've told you, the government in infrastructure development, they are using Islamic finance, especially in the capital markets. In Tanzania, our company, Yusra Sukuk Company, was the consultant and lead arranger for Zanzibar government infrastructure sovereign quasi-sovereign sukuk. You know how big it is? $446 million US. Let me tell you, my people who are listening, watching us, I am here not by accident. I'm here by default. We are working with the Ministry of Finance, Planning and Economic Development of Uganda for the issuance of the first Uganda sovereign sukuk. I don't call it bond because bonds are interest-bearing.
Yes.
Sukuk, or Islamic investment securities.
Yes.
Yeah. Yesterday, we were with you, you remember. You're the Minister of Finance. So when the time comes, you will hear a lot about this. And this shows how Islamic finance permeates into the people's life.
Thank you so much, Sheikh Issa. You have talked a lot about Islamic banking, takaful, sukuk, capital markets, and I'm sure our viewers and listeners want to know what exactly are these products and how do they differ substantially from the conventional financial system?
Yeah, when you want to differentiate between Islamic finance and conventional finance or Western finance, the first difference is on the interest. The way conventional financing, they charge interest on loans or on finance, which according to, as I've told you, Judaism, Christianity, and Islam, it is impermissible, it is haram according to Islam. So Islamic finance, there's no charging of interest. Now, people ask me, Sheikh, if we don't charge interest, how can we make profit? You see?
Yes.
I am a bank, I'm a microfinance, I'm a financial. Okay? So how can I make profit? Profit is made in Islamic finance when you indulge in an economic activity, an economic activity involving real assets. Islamic finance is about assets, Profit is made when you sell commodities. You cannot turn money. The biggest sin of the Western financial system or conventional system is making money a commodity.
Yes.
Okay? There is no commodity. I'm giving you 100,000 Ugandan shillings, and you give me back 10% out of it. With my money, you return it. This is interest. The 10% is interest. That's why they call it interest rate. Okay? So if the same, I want to do it in Islamic finance. And what did you want to buy with the 100,000 Ugandan shillings? Maybe it was a phone. A phone. Okay, a smartphone. So I say, you're right. I'm not giving you 100,000. I am selling to you a phone. Now you see it is a real economic activity. It means I have to go and buy phones from the supplier of phones. I have to own the phone, which means I'm owning the risk, and then I'm selling it to you with a profit markup the same percentage like that of interest, 10%. So when you pay me back, you will pay me 110, which is the same amount as that which was by using interest. So here people say, it's almost the same. It is not the same. There it was just money begetting money.
Yes.
Money is giving birth to money. That is interest. But the second one uses Islamic finance. It was a real economic activity. It is a trade. It is commerce. Actually, if you want to get real commercial banks, they are Islamic banks. These are the real commercial bank because they do commerce. But the conventional banks don't do commerce. What they do is selling money, money begetting money, which is interest-based. It is not. So this is the first real difference between Islamic finance and conventional finance, the matter of interest. Secondly, it is the issue of risk. In conventional, the financiers or financing institutions, they try to run away from risk as much as possible. There is risk transfer. They want to transfer the risk to one who is being financed. But in Islamic finance, it is a matter of profit sharing and loss bearing, PLS. They call it profit and loss sharing. Actually, it's not correct.
Yes.
It should be profit sharing. We share profit. And then the loss we bear. No, there's no sharing or loss. We bear the loss. So that is the second difference. In conventional, it's risk transfer. In Islamic finance, it's profit risk sharing. Okay?
Yes.
That is the second one. The third one, most of the Islamic conventional financial system are based on speculation. Ambiguity. Most of them are in speculation. That's what happened in 2008. The speculation in subprimes and went on to form a bubble in economy, and then they crashed the financial system.
Yes.
So Islam doesn't allow speculation, which is known as gharar. Gharar is haram according to Islam, but in conventional you can have even speculatory instruments whereby you can speculate and you can gain money. Okay. Another difference between conventional finance and Islamic finance is based on, not dealing with impermissibles according to Islamic finance. One of the impermissible is gambling, alcohol, pornography, you see?
Yes.
All these things which are impermissible, selling of pork, for example. You cannot give Islamic finance to a person who wants to have a big, pork farming, pigs farming. You cannot, because according to Islam, pork is impermissible. You see, alcohol is permissible, so you cannot give financing to someone who wants to create a big bar, for people to go and drink alcohol. You see, so these are the most, important differences between Islamic finance and conventional finance. But the keeping it all, it's that Islamic finance is based on Sharia. To Sharia compliant. You have to comply with the principles of Sharia. The ones I've talked about, some of the principles of Sharia: no interest, no speculation, no impermissibles, alcohol, gambling, and everything. Okay, but conventional finance is not based in any religious, principles. It's just based on human creativity, which is different between conventional finance and Islamic finance.
Okay. Furthermore, into the entire Islamic finance ecosystem, when someone hears of takaful, what should they expect?
Takaful is Islamic insurance. Insurance is about risks and risk mitigation. Islam teaches human beings to consider risks and the way to mitigate risk. Allah says in the Quran, Ya ayyuhalladhina amanu khudhu hidhrakum. Or you who believe, take your hidhra means precautions.
Yes.
Take your precautions. You can't even say because this is qadar. Qadar means a destiny from Allah. Allah decided these things, so I don't need to take any precaution. Yeah, and this teaching is by the Prophet. One day, a certain Bedouini or an desert Arab came to Medina, to the mosque, and he was with a camel. When he reached the mosque, the Prophet was there, he greeted the Prophet, and he said, "O Prophet of Allah, should I tie my camel and then trust in Allah, or I just leave it and trust in Allah?" Yeah. The Prophet said, tie it and then trust in Allah.
Yes.
That is insurance. That is takaful.
Yeah.
Takaful is depending on Allah, trusting in Allah while you have taken humanly possible measures of risk and risk mitigation. So now, how does it work? Conventional insurance, it is haram in Islam because, first of all, it transfers the risks. When you take your car to an insurance company to take a cover for insurance, you pay what they call premium, insurance premium, okay? And you are given a insurance cover, which is a witness that you have taken the insurance. For motor insurance, for example, for 1 year. Then when the year ends, you didn't get any accident, you didn't cause accident, no accident was caused to you. Your money is gone.
Oh.
So why are you taking my money? Because I didn't get any accident. and you have taken my money. So by just giving me a piece of paper, you are entitled to get all of my money and somebody else's money and another man's money. So these insurance companies are becoming richer and richer, like they are scheming us. It should have been, if I get accident, then right, take my money.
Yes.
If I don't get accident, why are you taking my money? So that is what Islamic insurance takes care of. Takaful, it takes care of that one. There is no risky transfer in Islamic insurance. That's number one. Number two, in conventional insurance, the insurance company is the owner of the insurance fund. The insurance money. When you pay the insurance, the money becomes under the ownership of that insurance company. You have nothing. But in Islamic insurance or takaful, those who go to get the takaful services, all right? They like forming a communal fund called takaful fund. Okay?
Yes.
They are sharing in the risk, they're insuring one another. When you get the risk, our money will be taken and cover you. And when I get, other people's money will be deducted and I am covered. But because we don't have knowledge of insurance, we find an insurance company which is registered by the government, Insurance Regulatory Authority in Uganda, for example. In Tanzania, it's called Tanzania Insurance Regulatory Authority. The company should be registered there. But that company is just a fund manager of our insurance fund. Okay? It is a wakil, an agent to us. So we are the owners of the insurance fund, and that company is simply managing our insurance fund. We pay that company agency fee. And then it manages our fund, covering the insurances. At the end of the year, now this is very interesting. At the end of the year, after auditing the account of our fund, there may be what is called underwriting surplus or underwriting loss or deficit. When there is underwriting surplus, the money remaining in the fund, because there were a lot of accidents, the money remained. That money does not belong to the insurance company. It belongs to us, we, the takaful participants. And that money should be divided amongst us, pro rata, meaning how big insurance I subscribe to, I will get more portion. This is known as surplus distribution. So in takaful, there is distribution of what remains in the insurance money to us. We are the owner of it, which you can't get in the conventional insurance. But you are not given the money in cash. What is being done is when you go to renew your insurance, you are deducted. They look what balance you have there, and then they deduct it. If you are paying in Tanzania, for example, it's 118,000 for a small car. So when you go there, they tell you, you've got 20,000 here. This is your surplus distribution this year. So you have 20,000 here. So 118 minus 20,000, how much do you pay? 98,000. This is a discount because I had already my portion in the underwriting surplus there. Look how fair it is. It's very fair. So this is what's known as Islamic insurance or takaful. And another thing very interesting, a portion of our takaful fund is divided to form what's known as takaful investment fund. The investment fund is invested by that takaful company, Islamic insurance company, in Sharia compliant investment. The profit which is obtained there is distributed between the insurance company, takaful company, and we, the takaful participants. All right?
Yes.
So you see, I have two sources of income in the insurance. I have the first source is the distribution of the underwriting surplus. The second source is distribution from the profit which was gained in the investment of our takaful money. So anyone who cuts takaful insurance will get two, returns from the fund. How do you get it from conventional insurance?
You cannot.
You cannot get it.
Yes.
So you see, this is the beautiful of Islamic insurance. In Tanzania, there are Christians who have subscribed to the takaful insurance. I told you in Malaysia, almost 40% who are subscribers of Islamic insurance are non-Muslims. In South Africa also, 30% non-Muslims. They love this system because it's very fair, It's not because that I don't get the accident, then my money is gone. In Kiswahili they say, kiendacho kwa mganga kirudi. If you go to the witch doctor, the money you pay doesn't get back to you. It is gone. You see? So this is how fair it is, the Islamic insurance or takaful.
Interesting insights there about Islamic takaful. How do these sectors cross-pollinate?
Yeah, these sectors, of course, Islamic insurance, Islamic finance is an ecosystem. When you say ecosystem, they interdepend one another. If you have Islamic bank, first, what are the components? You have banking component or banking sector. You have the capital market sector. You have the insurance sector and the money market sector. Okay? Now, if you have the banking sector alone, you have Islamic banks alone, like in Uganda here, just yesterday we heard that Insurance Regulatory Authority has given a license to a company called what?
Tamini
Takaful. The first takaful in Uganda. Tamini Takaful.
Yes.
But before that, Salam Bank was, providing Islamic banking services. One of the banking services of Islamic bank is giving of financing, asset financing. If you want to get a car from Islamic bank, the bank will purchase a car and sell it to you with a profit markup. This is known as murabaha financing.
Yes.
But that asset must be insured. Where do you insure it? How do you insure it? This is Islamic instrument. An asset financing using Islamic finance. If you go to conventional finance, you have made it not completely Islamic because you are using now non-Islamic insurance for an Islamic asset financing.
Yeah.
So the absence of takaful doesn't complete the Islamic bank. There should be Islamic insurance or takaful in order to complete, the Islamic bank. That's one. Number two, Islamic bank. They got funds from their clients. Those clients are waiting to get returns out of Islamic bank. Islamic bank has to, like any bank, it has got to invest the money through financing activities, for example. Where will the Islamic bank go to invest if there are no Islamic financial instrument, like now capital market instrument, like sukuk, like halal fund, collective investment scheme, real estate in trust? The Islamic bank will be suffering from excess liquidity.
Yes.
Because it cannot have opportunity to invest the funds. So it cannot make profit and it will never grow because there is no Islamic capital market instrument to make the Islamic bank invest the money of the clients and profit and then share the profit with the bank clients. That is another area. Islamic banking is suffering because of no capital market instrument.
Yes.
Takaful also. I've told you in takaful fund, there is takaful investment fund. They have got to invest that money into Sharia compliant instrument. If there is no Islamic banking, they can invest it in Islamic banking by fixed mudharaba deposit, okay, which is an investment account.
Yes.
And then they'll be getting profit. So if there is takaful without Islamic banking, it will not thrive because there is no investment for the takaful investment fund. The takaful also will suffer if there is no capital market, Islamic capital market products like sukuk, like halal fund,
Yeah.
Because if there are there, the takaful now will take the money, takaful investment funds, to invest into the capital market instrument. And it will get profit, which will be distributed between the takaful participants and the takaful company.
Yes.
That the capital market now itself, again, it will suffer. The money which is collected for sukuk, for example, it has got to be deposited in an Islamic bank. If there is no Islamic bank, the Islamic capital market will also suffer.
Yes.
You see? So it has to have Islamic bank, especially Islamic bank become the receiving bank of the sukuk issuance. So the money will go there. Also, during preparation for the payment of the principal amount in maturity, the issue of the sukuk bond will open a fixed mudaraba deposit in order that the money will be generating income while it is saving to pay the investors at the end of the sukuk maturity. So you can see, even in halal fund is people putting their funds to get what? Profit, like this unit trust funds.
Yes.
So you have the halal fund. If the halal fund is created and there are no investment opportunity, like in Islamic banking, there is no sukuk, it will suffer also. So this is an ecosystem which one depends on another. I'm so happy Uganda now has got Islamic Bank, and we are getting that takaful company, and soon we are going to get the Islamic capital market products like sukuk, and the halal fund will be coming, real estate will be coming. You see, for Muslims in any country, we suffer a lot because you have money, but you don't know where to invest, which is Sharia compliant. We remain with no opportunity. The government is issuing treasury bonds. You, Sophia, you cannot buy the treasury bond. Why? It is interest bearing. So while your neighbor is benefiting from treasury bond, you are not benefiting from treasury bond. So we do not grow economically because the financial system excludes us. There is financial inclusion and financial exclusion. If there is no Islamic banking, the real financial inclusion is not achieved. And this is according to United Nations Development Program, UNDP. They realized that 5 years onto the SDG goal, Sustainable Development Goal, Muslim countries were lagging behind. And one of the reasons is the issue of financial inclusion.
Yes.
Muslims, according to the conventional financial system which are there, were excluding themselves. They say, I'm not putting my money in that bank because it is interest bearing. And not getting involved in financial sector of a country means Muslims were being left behind in the Sustainable Development Goals. And now UNDP, World Bank, IMF, they've got full department dealing with what? With Islamic finance. I am the consultant for United Nations Economic Commission for Africa, UNECA,
yes,
which have given technical assistance to Uganda Capital Market Authority for establishment of Islamic capital market product guidelines. So I've been working with the CMA in Uganda, now it's almost a year, in the establishment of these guidelines. So that corporate sukuk, halal funds, collective investment scheme, real estate trust, they will start in Uganda and give businessmen, Muslim, non-Muslims, an opportunity of how to raise funds using Sharia compliant instruments.
Okay, thank you so much for demystifying what the ecosystem looks like and how it cross-pollinates into each other. So, Sheikh Issa, East Africa's Islamic finance journey is a developing story. It is marked by a significant growing demand for Sharia-compliant products, but still faces challenges. What does this journey look like? What are the particular challenges?
That's a very important question. Very important question.
Yes.
The journey of Islamic finance requires establishment of legal and regulatory framework.
Yes.
Anyone who is dealing with any financial system, the first thing to look at is the legal and regulatory framework of a country. And this is to build what we call the participants' confidence. So they have confidence when they see there are already legal regulatory framework which can defend, can protect anyone dealing with that financial system. So if you want to have a real Islamic finance, you have to have legal regulatory framework in place. In banking, you have to have banking guidelines or regulations. And in insurance, the same. In capital markets, the same. So if you go across East Africa, looking at legal regulatory framework, I've been working with the Ministry of Finance in Tanzania. We established the regulatory framework for capital markets. I've been working also with the regulatory authorities in Tanzania. We established the Islamic capital markets, guidelines for Capital Market Authority of Tanzania. And also with Tanzania Insurance Regulatory Authority, we established the Takaful guidelines, okay? And we've worked with the Rwanda Stock Exchange to establish the listing and trading rules for the Islamic capital markets in Rwanda Stock Exchange. I hear also here, Uganda Securities Exchange, they are working on the listing and trading rules as well. So it's very important. The first challenge is this legal and regulatory framework. The second is knowledge gap. The knowledge gap is not only to the public, even to the Muslim scholars. Our religious leaders, our sheikhs, our imams, most of them don't have knowledge about this modern Islam. I'm saying modern, because if you go to the books of Islam, there are a lot of all these transactions, contracts in Islam. They are there in fiqh, But unfortunately, in our mosques, there are no much, teachings about Islamic economics in our mosques. It's about the issue of worships, the issue of purification, the issue of divorce and marriages, but no economic teachings are being done in our mosque and our Muslim communities. So the knowledge gap is to the scholars and to the leaders of Islam is there. That's why in Tanzania, we do training and seminars with the Muslim scholars, in Islamic institutions. But also awareness to the public. The people don't know what is Islamic finance. This podcast maybe can help a lot of people. So when you tell them about Islamic finance, they say, it's almost the same with conventional, just change of names. And what they are talking is what the Quran says. ذَلِكَ بِأَنَّهُمْ قَالُوا إِنَّمَا الْبَيْعُ مِثْلُ الرِّبَا وَأَحَلَّ اللَّهُ الْبَيْعُ وَحَرَّمَ الرِّبَا. This is because they say, selling and interest is almost the same. But Allah has permitted trade and forbidden interest. So the verse which came 14 centuries ago is explaining the mentality of the people today. When you tell them this is Muraba financing, they say it's the same as the interest one. So there is awareness and knowledge gap onto the Muslim. But another big thing is there are not enough experts in Islamic finance. So a young man watching me, this is an opportunity. Don't just go racing degrees. Find the one in Islamic finance. You'll remember me one day. I've pushed my daughters and sons to take courses on Islamic finance. I've got 2 now certified Sukuk professionals from my families.
Oh, really?
Yeah. So these are some of the, and also political will and pragmatism, lack of political will. Look, Zambia put Islamic finance guidelines in 2014. Zambia. But as I'm speaking, there is no single Islamic bank in Zambia. No single Islamic microfinance. There is Takaful company, which our company there went and worked with another company called Indigo Insurance, and we began the Indigo Takaful company. The only Islamic finance institution which is currently in Zambia is that one, and another one, Takaful company also. Just 2. So lack of political will and pragmatism in our political leaders, our country leaders, can hamper the growth of Islamic finance.
Okay. Our dear viewers, that was Sheikh Isa Mohammed Ahmed from Tanzania. He has shared massively about the Islamic finance ecosystem and how it works and what we need to expect going forward. God willing, we are looking at this sector closely. We are at the footstool of its growth. We wish it well. We are happy that the Takaful regulations are also out, and we already have a Takaful company that is up and running. The Capital Markets Authority promises to issue the Sukuk guidelines very soon, and Uganda is fast pressing into issuing its very first sovereign Sukuk for the benefit of infrastructure development in this country. This is a huge opportunity for the professionals out there. The industry needs you to serve it. Pick interest in it, engage with it, learn how your expertise can be relevant to it, and acquire new skills so that you're able to serve the industry. To our country, our regulators, the government of Uganda, we thank you. We thank you for rolling out the Islamic financial system. We continue to look to you to create policies and frameworks into the national development policies, and we look forward to a fruitful growth of the Islamic financial industry in Uganda, in East Africa, in Africa, and across the globe. Thank you so much for having the patience to listen to us. Follow us on YouTube, the Islamic Finance Hub. Give us feedback, engage with us, and let's grow this sector together. I have been your host, Sophia Chigozi, and I thank the very able Sheikh Isa Mohammed Hamed, for being our guest today and for sharing massively his knowledge and experience in the Islamic finance sector. I thank you, and Assalamu alaikum wa rahmatullahi wa barakatuh.